Welcome to the Balancing Act podcast. This episode is the first of our three-part Numbers Don't Lie series. Today we're taking a look inside the world of forensic accounting, where investigation meets accounting and the numbers tell the story. Joining us are Mark Dennis, Jessica Nadler, and Brian Landau from the SL Biggs division of Singer Lewack. Today we'll discuss what forensic accounting is, how often it differs from traditional accounting and auditing, and share real-world stories from the field. Now here's Mark Dennis.
Hello and welcome to the first episode of our three-part Numbers Don't Lie series. I'm calling here from Denver, Colorado. My name is Mark Dennis. I'm a partner at SL Biggs, and I'm joined by my colleagues Jessica.
Hello.
And Brian Landau.
Hello.
Jessica Nadler and Brian Landau are both based in Los Angeles, California, which is also the headquarters of SL Biggs, a division of Singer Lewack, LLP. We're here to talk to you today about forensic accounting and how it's different from other types of accounting and what kinds of experiences we've had as a team. When most people hear the term forensic accounting, they just think hidden bank statements and fraud, but it can involve a lot of other aspects. Uncovering facts, following financial evidence, helping to resolve disputes between business partners and family members. So today we're going to cover what forensic accounting is and what it isn't, how it differs from different types of accounting, what some of the warning signs are that people should look out for, and some of the real world experiences we've had as a team and red flags to look out for. So that's what we're going to talk about today. Jessica.
Thanks, Mark. I think it would be very helpful for our listeners because it's a common question I get. What is forensic accounting?
So forensic accounting, it's accounting plus it's investigation. And it's used in litigation, fraud matters, business disputes, trust disputes, bankruptcy, asset tracing. Usually it involves some sort of legal dispute or aspect, and it's designed to answer the question, what actually happened here? And it's different from other types because the work and the work papers, it must withstand scrutiny in the courtroom and under oath.
Mark, a really common question I get, and I think it's a common confusion, is I get called for a forensic accounting audit, which you and I probably know is not exactly the same thing. Forensic accounting and audit are very, very different. Mark, can you explain how they are different?
I get that all the time. I get, there'll be two parties that are disagreeing. I want these financial statements audited. And auditing, it provides reasonable assurance that financial statements are fairly presented. There's a whole set of rules about auditing. People want something called a no opinion letter at the end of it that gives people assurance that the financial statements are correct. And it's based on sampling and testing and materiality thresholds, but it absolutely is not designed to investigate every suspicious transaction or uncover fraud. It's not a transaction level exercise.
You said materiality, which is actually what I think greatly affects if you can catch fraud in forensic accounting. Brian, can you explain what materiality is and why it can sometimes preclude someone from catching fraud?
Materiality in general is a floor in terms of transactions we look at for analysis under an audit. In a forensic accounting, there is no materiality threshold. Every single transaction is reviewed and analyzed to see if there's fraud or if there's any other types of malfeasance.
So to further explain what Brian just said is, for example, a materiality threshold commonly is $10,000 or $20,000, which means anything under $10,000 or $20,000 will not be looked at. So if you have someone dipping in and taking $5,000 at a time, that cannot be caught because of the materiality threshold. Am I missing anything?
That's correct. And materiality is generally governed under a set of rules under generally accepted accounting principles. Under forensic accounting, we're not governed under GAAP. Therefore, we look at every single transaction in these situations.
So, Mark, can I just call my regular CPA who does my tax return for this?
It's a good question, and it gets to you asked earlier about the difference between forensic accounting and audit, and now let's just touch on the difference between forensic accounting and traditional accounting. And I don't want to downplay traditional accounting by any means. It's hugely important. It's a cornerstone of the U.S. financial system, but it focuses on accurately reporting and recording and reporting financial information. It's often for management or for tax reporting or for lenders and investors, and it's relying on information provided by the clients and applying established accounting standards like GAAP, like Brian just referred to. So it's not really an investigation. It focuses more on recording and reporting.
It's sort of, in traditional accounting, we take your word for it. In forensic accounting, we don't trust anything you just told us.
You definitely have to, as a forensic accountant, you have to approach every project with an inquisitive mind and doubt things until you can satisfy yourself.
Mark, in traditional accounting, we would issue a financial statement or a tax return. What would you do under forensic accounting?
Yeah, good question, Brian. Often what happens is we're asked to generate with an expert report. And, that expert report, it needs to present the numbers in a way that people can understand. And that's one of the key things, the most important things that I think we bring to the table. Presenting this information, gathering the information and presenting it in a way that judges and juries and attorneys and other non-accountants can understand. But there are other aspects to that report too. You can't just write down your opinion based on what you've looked at. You need to list all the source documents you've looked at and really explain your approach and be ready to defend it on the stand, under oath, potentially against other experts trying to attack you.
So we basically try not to sound like accountants when writing these reports.
Right. But I think the key is presenting it in a way that people can really understand and make informed decisions.
So clear, precise presentation of information makes a good forensic accountant. Being able to translate into non-accountant speak and talk like a normal person makes a good forensic accountant. What else makes a good forensic accountant, Brian?
I think, like I said, you need to approach things with an inquisitive mind and really doubt things until you can prove them to yourself. And I think that goes back to some of the ethical standards that we hold ourselves to as CPAs generally.
I think, in general, the inquisitive nature is key. If you like putting together puzzles, if you like putting together Legos and trying to figure out the missing pieces, forensic accounting is where you do it. And that's what you need in a good forensic accountant.
Just taking a poll, how many times have you reviewed literally a shoebox full of receipts?
Hundreds of times at this point. At the end of the day, we've looked at shoeboxes, we've gone through storage units, we've gone through warehouses, looking for records, digging through records in dirty and dusty and rainy areas, trying to uncover the truth.
I'm looking at a box on my floor right now, Jessica, with tax returns going back to 2018 for not just an individual, but 4 or 5 other different businesses and trusts. We had to get those out, spread them out on a table, and try to piece the puzzle together. Like Brian said, it's like doing a Lego set.
Oh, I do love the conference room spread of papers and putting everything together. That's always a fun puzzle.
Sometimes you need a big table for that.
It's true.
How many years back have you guys gone in looking at transactions?
So I'm a bankruptcy trustee here in Colorado, but we're just wrapping up a 2011 case right now. Involving a partnership, and these people get into litigation and it just drags on and on and on, sometimes for more than a decade.
I'd say probably 10 years. We do have to remember, if you don't have the bank statement, you can't go back more than 7. I think what would also be helpful is, let's talk about red flags and fraud. Brian, if you're a business owner, what do you want to look for as a red flag that fraud might be occurring or it's on the horizon?
Best indicator that fraud may be occurring or something's going on in your business that may not necessarily be fraud is you look at your financial statements, you're very profitable, looks like you're doing great, but it comes the end of the month and you have no money in the bank to pay the bills. That's generally the first indication that something's going awry. Other instances are you've got large accounts and meals payments and meals and entertainment you have no idea what these transactions are. You've got an employee who creates the accounting as their own fiefdom and takes control over all the books and records so you don't get access. Those are the best indicators that there may be something going on.
Do you see fraud happen outside a business context? I think a lot of people think it's usually a business, but can it apply elsewhere?
It's not always fraud. There's other types of disputes. You could have disputes in trust and estate matters amongst family members. You can have it amongst shareholders. When you have it with family members, while there may be indications that you believe that there's fraud, it could just be financial mismanagement, or you're not getting clarity of the records you've got. So just because there's an issue, just because you think there may be fraud, isn't necessarily the case.
But your family members can commit fraud, correct?
Family members can and have committed fraud, and it's whenever there's large sums of money involved, there's high emotions, there's high tensions, and you can bring us in to provide clarity. Even if there's no fraud, we can lay out the numbers and the figures in such a way that everybody could understand what's happening.
So to recap, what you're saying is just because you think there's fraud doesn't mean there is or isn't fraud. And a useful tool that our listeners can always use is to ask for a preliminary consultation when they have concerns, because a third party coming in and giving a neutral assessment may either help alleviate concerns or be like, no, you've actually got a problem, and help lay the foundation for next steps.
That's correct, Jessica. We can come in and do a gut check for you to see what's happened. We can take a high-level approach and see if there's any instance of fraud, or if it's just you need an idea of what the numbers you're looking at. And we can do that. We could start at a very high level and get as granular as necessary, because these things do become costly.
So a gut check is a lot of times cheaper than a full-blown forensic accounting before you jump in.
100%.
Speaking of a high-level gut check, I think that's really important, Jessica, because forensic accounting can get expensive. Again, audits are expensive, and they don't involve transaction-level investigation. We're looking at every transaction sometimes. A first step for me is always to look at the balance sheets, and the number of times I see it all the time. Negative accounts, negative accounts payable accounts, or negative liability accounts, or negative asset accounts. I mean, they're just indicative of errors, bookkeeping errors, and it just gets back to basics around you're running a business or a family office for that matter, and ideally there should be procedures and there should be controls. And I just see a lot of times it's not fraud necessarily, but it's just a breakdown. People aren't following the procedures to record the transactions correctly, or there's no control. So someone is just in charge of the whole thing, as Brian said, and just doing it incorrectly.
And Jessica, sometimes additionally, we don't have balance sheets, or we don't have traditional financial statements. What do you use to do your gut check?
Bank statements. I'm a big fan of the bank statements. See what beginning cash is, ending cash is, look for big numbers, check images if you can get them. I know not everyone uses checks these days, but I personally find these checks very interesting and very insightful. Check images, deposit images, anything you can obtain legally. That's the key I would like to stress. Please do not illegally obtain records because you think fraud is going on. That is why I caution this.
But we shouldn't underestimate, not only the importance of those records that Jessica just talks about, but oftentimes the difficulty in getting them. Many banks don't routinely provide statements that have check images and deposit images. You got to go and request those. Sometimes banks won't cooperate. Sometimes you have to get attorneys to issue a subpoena. It takes months. These are important first steps that just form part of the investigation.
So you're saying this isn't a tedious process, right?
It can be tedious. And going back to the check image thing, in this day and age, so many transactions are electronic, of course, and often there's many different accounts, credit cards involved, but looking at bank statement transactions, you really need to learn how to decipher those. Some of them will have 32 character references. Some are unique, some are not unique by transaction. Some may indicate a payee, some may not. It's really getting your hands dirty. And that's not something that any audit is going to, and it's also not something that a traditional financial statement production process is going to do. This is transaction level investigation.
So assuming we have records, which Hopefully we do. Brian, if the client has records, when should they call you?
The minute a client feels that there is something going on or they have a suspicion that there's something going on, they should call us. And right after they call us, or even before they call us, they should document. They should keep all the records they have, all the emails, all the bank statements, the check images, deposits, wires, Excel files, whatever they may have, to be able to uncover if there's a situation. There may not be fraud, but we have the ability, we have the resources, and we have the files to assist.
I think, let's use some real world examples because everyone loves a war story. And I've seen some creative things over the years, as well as I know you have as well. What is your favorite way? I know, quote unquote, favorite, meaning most creative way you have seen someone commit fraud where you're like, actually, that was pretty clever. We still found it, but it was pretty clever.
Over the years, we've found fraud in so many different ways, but kind of one of my favorite is we were employed by a bankruptcy trustee in order to recover funds for a bunch of creditors. In that instance, we started with QuickBooks file, which looked normal. Like you had a normal traditional balance sheet, P&L, nothing seemed out of the ordinary. Then we took it one step further and started looking at the bank statements and the check images. Even still, we looked at the check images, everything looked legitimate. They had payees to traditional vendors. You had FedEx, UPS, utility payments, things of that nature. And then we took it one step further than that and started looking at the back of the checks. Lo and behold, we look at the back of the checks, every single check was issued and endorsed at a check cashing agency. Turns out that all those checks were then being cashed at the check cashing store and pocketed by the debtor, basically defrauding the creditors out of millions of dollars. There's no way we would have found this if we didn't go down to the transaction level and specifically look at the backs of the checks in order to uncover the fraud.
Nor do checks. The checks never lie.
Mark, what's your favorite fraud story?
Well, we had a recent one where actually the client was a victim of fraud, and in this day and age, all of us, ourselves and our parents in particular, can be victimized by fraudsters. And in this case, the bookkeeper was sent a link to click on to change the bank account details for cash coming into the business, and it came from what looked like a legitimate email address, but it was just missing one character, and she clicks on it, she changes the destination of cash. All of a sudden, the cash is getting drained out of the business, and you really have to go back and reconstruct that, what happened in order to uncover something like that.
Great. Thanks, Mark. What about you, Jessica?
The best way I have seen it, in my humble opinion, is parking your money with the U.S. government to avoid paying your judgments and your debts. We had a matter where people owed a lot of money and they intentionally overpaid their taxes, did not report the payments on their tax returns. So on the face of the tax return, you wouldn't have seen the payment. And we went through the bank statements and saw extra payments to the U.S. government that didn't align with their tax return. And then we found out they had parked $500,000 with the U.S. government and were just waiting to claim their refund until after the litigation closed. In the grand scheme of clever, I put that up there.
But in all these instances of fraud and where we found and recovered money, who was the beneficiary of all this once we've recovered the money?
Well, the beneficiaries can vary. Sometimes it's a bankruptcy estate, which goes to the creditors because they're owed money. Sometimes it's a defendant or a plaintiff on either side if there's a cross lawsuit. It's just the person that's been harmed. Usually in some capacity goes back to the person that has been harmed and try to make them whole. You may not be made whole ever, but at least getting some of it back will make you feel a little better.
It could be a bank or like a judgment creditor, someone who has a judgment and is trying to collect on it.
And without forensic accounting, this wouldn't have been possible.
Correct. Like we talked about, performing tests with materiality thresholds is not going to uncover this transaction level activity.
Well, I think we've spent a lot of people's time in learning about forensic accounting. I hope everyone's enjoyed it. I always love war stories. Why don't we send our listeners off with like a 10-second soundbite of forensic accounting tips?
Okay. I'll say it's not just spreadsheets. It's investigative problem solving.
You don't need a smoking gun. Just call us.
Many disputes become expensive simply because of poor documentation.
Okay, well that kind of takes us to the end of our first segment here. I mean, the final takeaway here is, whether it's fraud or a trust dispute or a bankruptcy matter or a business disagreement, forensic accounting helps us uncover the facts, bring clarity to the questions, and ultimately help people make informed decisions and ultimately recover funds for creditors and others who are deserving of them. So if you'd like to learn more about SL Big's forensic accounting and litigation support services, please visit our website or reach out to a member of our team. Thanks for listening, and we're looking forward to segments 2 and 3 of this series where we're going to deep dive a bit more into some of these topics.
Thanks for listening to this episode of the Balancing Act podcast. Join us next time as the SL Biggs team and special guests continue our Numbers Don't Lie series, exploring how to successfully navigate trust accounting disputes. They'll discuss common challenges, key financial issues, and how forensic accounting can help bring clarity to complex trust matters. Until next time, thanks for listening.